the sector is trying to get to a 50% emission reduction by 2030. So we're well ahead of targets. And again, these I think are important actions that we are implementing to reduce emissions, whilst at the same time recognizing the importance of the upstream oil and gas business, the production business, to ensure that we have enough supply for the economy to ensure a smooth sailing through this transition, which is really an evolution and not a revolution.
Amjad, given what we've seen with this crisis and the escalating price that's impacting so many countries across Europe, is there a fast fix that leaders are not thinking about at this stage as they try and shore up energy supplies?
I mean, a fast fix depends on where we end up. I mean, I think the amount of oil and gas supplied by Russia to Western Europe and to the world in general is large enough to cause a very significant shift in the markets, if indeed it's completely removed off the market. So I think we have to recognize that this is an issue that we have to deal with, and it's a question really, Karen, of how much of a shortage we look at. Now, obviously, we've made incremental steps, which we had to make, and I think this is the moral compass is extremely important, and I do think we have to continue putting pressure based on this calamity that's happened in Ukraine, and something is completely unacceptable. So we have to continue doing what we have been doing, or what the governments have been doing, in putting more and more pressure, and the economic war that we have undertaken against Russia, which is really more critical than any physical war anyway. Today's wars are all going to be economic rather than physical. So that's the key determinant in going forward. Now, we have to do that whilst recognizing that the amount of crude and gas that Russia supplies at present is at such a level where we cannot shut it off and continue with an economy that's not completely going to be dislocated.
Amjad, I remember a few years back when we all actually went to Davos pre-COVID that you said there was no geopolitical risk premium in the price of oil, and we've certainly got it in spades this time round. But if you look at the price today, 121 on Brent and on WTI 114, how much would you say that the geopolitical risk is priced in? Would you say we're fully priced at this stage?
So, Karen, I think your memory is amazing, because that's exactly what I've been harping on for a while, saying, that at that time, when we do get some political unrest, this premium, which has been in the price of about $5 or $10 over probably the beginning of the decade, has disappeared and indeed may come back. As you know, we've gotten to $140 a barrel. So clearly the numbers for the risk premiums have gone up. I mean, it's hard to estimate, Karen, but the other thing that's exasperated the movements is the limited liquidity in the market because of the large positions that have been taken by both traders and producers. I think the amount of liquidity in the market exasperates moves when things do happen. So when we got to 140, obviously the premium was probably closer to $30 or maybe $40. I mean, it's hard to say, but it's clearly in the double digits. I mean, I would estimate it to be 10 to 20 at present.
Hi, I'm Amjad Bseisu, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.